Welcome to Pro Webcast News, where we bring you daily industry updates. Today is Tuesday, August 11th, and you're watching the Afternoon Update with Paul Wilson. Today's news is sponsored by Covenant Reliance Producers. We build success stories. For more information, please visit www.crproducers.com. Now for today's headlines. Non-farm productivity rose at its fastest pace in 6 years in the U.S. during the second quarter, according to government data released by the Labor Department. Productivity rose at a 6.4% annual rate, the largest increases since the third quarter of 2003, after a revised gain of 0.3% during the previous quarter. The increase was largely fueled by slashed costs by companies as they continue to protect profits. Meanwhile, hours worked decreased by 7.6% in the quarter, while unit labor costs, which help measure inflation and profit pressures, declined 5.8%, the largest fall since the second quarter of 2000. In related news, the current recession will likely end during the third quarter, although details about the speed and longevity of the recovery are still up for debate. According to the Blue Chip Economic Indicators survey of private economists released this week, approximately 90% of respondents believe the economic downturn will be declared to have ended during the current quarter. In addition, nearly two-thirds of those surveyed believe the economy is set for a U-shaped recovery, meaning below-trend growth in gross domestic product will be followed by increased growth during the second half of next year. Meanwhile, approximately 17% expect a V-shaped recovery, where growth pulls back to its trend rates on a sustained basis, and the same percentage feared a W-shaped recovery. In retirement planning news, Americans held $13.4 trillion in retirement assets at the end of last quarter, making up 33% of all household assets in the U.S., according to the Investment Company Institute, or ICI. According to a recent ICI report, individual retirement accounts held $3.4 trillion, while employer-sponsored defined contribution plans also held $3.4 trillion, $2.3 trillion of which were held in 401k plans. Meanwhile, 44% of IRA assets and nearly half of defined contribution plan assets were invested in mutual funds. The report also found that between the end of last year and March 31, 2009, retirement assets declined 4.4% to $13.4 trillion. Finally, target date mutual funds managed $159 billion at the end of the first quarter, down from $164 billion at the end of the fourth quarter, while nearly 90% of assets in those funds were in retirement accounts. I'm Paul Wilson, and thanks for watching Pro Webcast News. For more in-depth news and features, visit producersweb.com.